Well, happy Monday. It's June 17th. Want to bring you the latest data here in the Austin metro area. I'm going to start with a question. Do you think we're in a buyer's market or a seller's market? Well, we're going to break some of that down today. I'm going to show you it kind of depends on what price point you are looking at. We're going to start with some May trends, looking at the total sales trends here in the metro area as we head through the summer. I've got some charts on that as well. I'm also going to share with you the latest rental data now that we're kind of in peak rental season in mid-June. And then we're going to wrap it up with mortgage interest rates. We have some positive news there as well following the Fed meeting from last week. Let's start with May. This is looking at the total Austin metro area. For May, the median sales price pretty flat. With last year less than 1% difference, still sitting around that mid 450 mark. But closed sales are significantly down for the whole metro area, at least almost 13%. Volume, which is the dollar amount, down as well. Months of inventory still going up. So those are listings building up on the market. But new listings and active listings, there's a lot more sellers, but we're not seeing pending buyers. So pending sales are down while listings are up. Days on market actually came down a little bit. I'm curious about that one. I would think that's not correct, but we still could have had some sales. What could bring that down is potentially withdrawals and expireds. Sellers go on the market, they test it for a couple months, they decide not to sell, they take their house back off. That might lower the days on market there. Close price to list price is improving. So last year, which was very cold, it was about 6% off list price. Now it's about 4.5% off list price. That's the total metro area. Let's get into the city. Median sales price is up. I think some of that is because we're starting to see maybe a little bit more thawing on the luxury side, although it is still, I'll show you in a minute, very cold there. But maybe we're seeing some higher priced sales. Closed sales up a tiny amount. Sales volume, again, this could be luxury getting some activity. Months of inventory, though, still way, way up. 2.7 months higher than last year. So lots of inventory in the city. New listings and active listings. Look at active listings up 85% from this time last year, and pending's only up 6%. So again, that's why months of inventory, there's some sales, but the months of inventory are just growing a lot, or the listings are growing a lot faster than the buyers. Days on market going up a little bit. And again, close the list price identical to last year in the city. So this is Travis County. So Travis County, yes, is Austin, but it's also a lot of other municipalities from the east side, which is Manor, to the west side, which is Lakeway and Lago Vista and those areas. So the median sales price is up. Closed sales, though, down significantly. So maybe the suburbs are pulling that down. Sales volume is down. Months of inventory is up. Again, active listings significantly up, 46% over last year, and pending sales are down. So even though the city was seeing a little more activity, and maybe because price points are coming down, people are coming back into the city, and it's making it harder to sell those properties in the suburbs. Now you can come into the city maybe for the same price. And so we're seeing that, but the close to list price is still improving a little bit. This is Williamson County to the north. So again, their median sales price pretty flat, $435. Closed sales, they're down about 11%. Again, sales volume is down, months of inventory is up, but much tighter. They're only 3.9 months of inventory in Williamson County. Active listings way up. Pendings are pretty flat. They're within about 1% of this time last year. Days on market came down, and their close to list price has improved a lot more. And again, I think that's because they have fewer months of inventory. And we're seeing those, they don't have as many listings. So we're seeing that a little tighter in Williamson County. This is Hayes County to the south. Median price is down a little bit, $389. It's more affordable. Closed sales are up a little bit in Hayes County. Dollar volume's up. Months of inventory, about 5 months. New listings and active listings, they're up, but again, not as much as we've seen in other areas. Pendings are up almost 18%. Why? It's more affordable. So what you're seeing is, again, flight to affordability. You're seeing people go and raise those prices or raise the activity, I should say, in those areas. Days on market coming down. And again, their close to list price is improving. This is Bastrop County. Closed sales are down. Median price is down. Sales volume's down. Months of inventory is up. Pending pretty significantly down. And again, I think part of the issue with Bastrop is a lot of people moved out that direction when it was hard to buy in the city. As things get more affordable, closer to the metro, maybe they're seeing less folks making that move out to Bastrop. It's about 30 minutes east of the Austin area. Finally, Caldwell County, which is southeast, it's our most affordable of the 5 counties, but the median sales price is coming down. It's now below 300,000 on average. Closed sales pretty even. Months of inventory is not a lot. It's only about 3 months of inventory. Their active listings and new listings are flat. They're not really seeing much there, but their pending sales are up 35%. So, the price is coming down, but again, affordability, but they're not nearly as many listings in that area. I want to come over here and show you a couple charts. So this is pendings. So the full line that goes across is last year. And typically we get to the summer. Here's April, May, June. That's when we kind of peak out. We have peak sales. And then as we get to July 4th, it starts to taper off. Well, look where we started to taper off this year. This is April. And we came way down in May. Why? Interest rates. Interest rates were kind of, we had come off a high rate last fall. We got to January and they were below 7. They were in the 6s. They kind of stayed bouncing around 6.75 to 7 through March. And that really boosted a lot of buyers into the market and created a lot of activity. Once we got to April and the rate went back up, it just really killed that demand because the prices had gone up some. And then you add the rate on top of it again, and buyers were like, nope, unaffordable. And so that dropped sales noticeably over last year. If I come down here and look at the median and average sold price, again, here's April and here's May. At the far end of this chart, it's already coming down a little bit, and that's earlier than normal. Last year, we went up through June and then came down from June to July. We're seeing it come down April to May. So unless something changes, we're about 2 months ahead of schedule this year on that drop. I want to come over here and look at rents. So let me see if I can boost this up a little bit. Nope. I'll try it one more time. There we go. So this is looking at rents in May. The top box is single family homes. The bottom box is duplexes. So single family homes right now, the median price is down about 2%. Days on market is up about 17%. New listings are up, again, about 17%. What we're seeing is more rental inventory this year than we had last year, and it's watering down. The competition takes a little longer to rent it out. But months of inventory is not terrible, 1.7 months. Things are still renting fairly efficiently, especially in single family properties. We're seeing them move okay. As long as you have a good rent price, there is still demand in that market. We just have more inventory, so it takes a little longer to move it. On duplexes, again, new listings are up about 14%. Median is dead flat with last year. So the median on duplexes is pretty flat. Days on market is up a little over a month. Not terrible still, but just about a month, just around a month on single families, maybe 5 weeks on duplexes, but months of inventory only about a month. So single family and duplex is not doing too bad. I think we are seeing it really lag longer on condos, on quadplexes, anything that competes more with an apartment complex, because we have lots of apartments that have hit the market. I think you're going to see the days on market longer on those two categories. I'm going to come back over here. Now let's talk about mortgage rates. So the Fed met last week, and of course, everybody's been watching all this inflation data, the Fed's meeting. And really what people are trying to figure out is the Fed going to cut it all this year? What are they looking at? What's that timetable look like? They provided some clarity this last week, basically saying we may cut one time this year. And so even though that's not as optimistic as a lot of people had hoped, it's clear, it's more clarity. That helped the market. Interest rates came down. For the last 3 days, we've had interest rates below 7%. That's the first time since April 1. And so we're sitting right about 6.99. If you have excellent credit, typically you're going to get about 0.5% lower than that. So maybe a primary home buyer with great credit's paying about 6.5 right now to get a mortgage. I'm going to show that to you on a chart real quick. So this is March. I started from March. And you can see right through March, yeah, we went over 7 a couple times, but it kept bouncing down into the 6.8, 6.9 range. And then when we got to April 1st, when it jumped over 7%, that was it. We weren't coming back. And it rocketed up in 2 weeks up to 7.5. And it stayed there for the rest of April. Really, that's what pushed all that market demand down. Yeah, it came back down to 7, but then it rocketed up again, bounced again. But finally, these last 3 days, we've been below 7%. So is it a trend? Too early to say. But if we can have rates stay around 7 and maybe even come softer, that will help buyers and help them get back into the market. One more little piece of data I want to show you, and I want to thank Patrick Birdsong, another agent in my office, who pulled this together. So are we in a buyer's market or a seller's market? I asked that question at the beginning. Again, it depends on the price point. So the colors here in the middle are going to kind of tell you what's happening. So if the homes are under 400,000, we only have about 3.5 months of inventory. In fact, we have less than 3 months, less than 3.5 months of inventory. That's still typically a seller's market. It's not a strong seller's market. I'd say it's a healthy seller's market, but the list to sale ratio is tighter. And the discounts are only about $6,700, $6,800. So we're seeing those properties move a little faster and sell a little closer to list price. If you're in the middle class range, maybe the 400 to 800,000, you're more in a balanced market. So you're now pushing 5 to 5.5, almost 6 months of inventory, especially as you get up towards $1 million. I'm a believer that 4 months of inventory is balanced. 6 months starts to trend towards a buyer's market. But anyways, we're seeing, little bigger discounts, but still not the worst of the market. But as we get into the luxury space, you get over $1 million, very quickly the months of inventory skyrockets. You go, $1 million to $1 million, 1.25 to 1.5. You're now at almost 8 months of inventory. Once you get up to almost 2 million, you're at 10 months of inventory. And once you get into luxury, you're 1.5 years. And so imagine if you were listing a property, a nice property, $2 million, $3 million, that property could take well over a year to sell it. And so that's where we're really seeing downward pressure. And a lot of that has to do with rates. And it also has to do with the type of buyer that's looking for those properties. Those could be cash buyers. They could be CEOs. They could be folks that are running businesses. And if they're cash strapped right now, or their business is feeling downward pressure with interest rates, they're less likely to buy. Whereas everybody is pushing down towards affordability. And so now, instead of trying to buy the best thing they can buy, they're trying to buy the most affordable thing they can buy. And we're seeing that here in the numbers. So if you are a seller right now, I think it's good to really understand which way the market is trending. As long as rates stay a bit higher and we have all this inventory in the market, just know, A, it's going to take longer to sell. B, you've got to be the best thing a buyer can buy in your neck of the woods. So if you're just in the middle, you're in the middle and you're not standing out. What's going to make you stand out? Do you have the best condition of any property in your neighborhood? Are you the best price of any property in your neighborhood? What's going to make that home stand out? And that's something we can help with. If you're a buyer right now, rates may be starting to come your direction. It's going to be slow, but you have more inventory in the market than you've had in 15 years. So if you want to find properties, now is the time to go out and find properties. You have the opportunity to negotiate with sellers. And we are having a lot of success getting closing cost credits and things like that, that not only can help reduce either your closing expenses, but also could help you buy down the interest rate. Hope this information is helpful. Make sure to check out our videos each and every week on our YouTube channel at Ryan Kelly Group. We'll be posting these each and every Monday there. And of course, if you know somebody looking to buy, sell, or invest in the Austin area, we look forward to talking with you. Well, my kids are at camp for the next 3 weeks, so I'm going to be chilling here at the office. But until then, check out our videos, and we'll talk to you next Monday. Thanks.